What's going on, guys? So welcome back to another video. Today we're going to jump in and see what happened to my 50k account this week. Alrighty, so as we can see, not the best trading week. We took 3 trades this week. All 3 were losses. Okay, so yeah, not the best trading week. I didn't have one good trade that actually panned out and made money. They're all losses. Now I'm just going to go through and explain each trade, why I took it, what happened, why it was a loss, and what I'm looking into doing next week, and also what I can learn, I guess, from these losing trades. But first off, obviously, we can see that we had all our losing trades, losing days. So remember, my rule was maximum of $250 risk per trade. So we can see that I actually stuck to that rule. I didn't over leverage. I didn't lose more than $250 on any trade. So that's good. That's the first step to being profitability, is not breaking your leverage rules, right? That's the first step. That's one of many. So let's jump straight in. So we can see we had a $188 losing day, a $218 losing day, one trade. This says 2 trades, but it was actually just one. I'll explain why it says 2, but it was just 1 trade. Now it was a really small loss because it was actually like a break even, that one. Not a actual full loss. These were both full losses, stop loss hit. This was a break even, so that's why it was a bit small of a trade, of a loss. But yeah, let's jump into those trades and see what the hell happened. So for full transparency, how this is gonna work is I'm gonna show my executions first on Topstep X, which is the platform I'm trading on, and then we'll go into trading view, and because I prefer it as a platform for charting, but I will show you my executions just so you can see 100% everything that happened, and I'm not making anything up. So we go settings, charts and data, show executions, save. Here we are. Here's my 1 trade, 2 trades, and 3 trades, 3 losing trades. Okay, so what was my rule, right? My model, my strategy is buying inside of fair value gap with a stop loss at the low when I expect the daily candle to go higher, or some kind of daily bullish bias or something like that, right? So here we have 2 fair value gaps. If we drag that out, we can see this is one section of inefficient price action. These 2 fair value gaps here. You can see where I'm buying, +2 at 3691.8, 3691.8 right here. So you can see I'm buying inside that fair value gap, and my stop loss stopped out in the same candle at 3682.5, which if we look at this low here, 3682.5. So you can see I bought inside this fair value gap and I got stopped out at that swing low right there. Okay, so this trade did not work out, but this essentially is the model that I use to enter into price action, right? Buy inside a fair value gap with the stop loss at the swing low just previous to that fair value gap that I'm buying. Okay, now why did I buy in this fair value gap and my stop loss at that low? As we can see, there was no, like, I didn't break rules. Like, I used the model to enter. I didn't over leverage. The reason this was a losing trade is because the daily candle I thought was going to potentially unfold into a low resistance liquidity run and start running to the upside, but that didn't happen, and so that's why it was a loss. It was a loss because of an analysis mistake. I made an analysis mistake. I thought it was going to run higher on the daily candle, and so that's why I bought this fair value gap and put my stop loss at that low, but it didn't. So it reversed instead of going higher and went straight low and stopped me out. Okay, so that's not a mistake of, like, once you journal your trades a lot, you start to understand that the only way to attain profitability is to make your mistakes less worse, if that makes sense. Like, when you have winning trades, it's great, okay? But you're always going to have losing trades. As a trader, you always have to have losing trades, and you need to figure out how to not make really bad mistakes. And your mistakes should purely be based on your analysis being wrong, and not you doing something that's outside of your rules, or you like over leveraging. or entering where you shouldn't, or putting your stop loss where you shouldn't, stop loss where you shouldn't. If you make those kind of mistakes, then it's going to be harder to get to profitability, because when you're making these mistakes, it's things that aren't repeatable. You're doing random stuff. You're taking a long here, you're taking a short there. You're putting a stop loss in this location this time, and then on that trade, you're putting it in a different location. And if it's random, then you can't repeat it, right? It can't be repeated. And so making those kind of losses, even though temporarily you may see profitability temporarily, long term, it's just not gonna, any money you make, eventually you'll give back to the market, right? And that, at least that's what I've found through like years of trading, right? Any money you make, you'll eventually give back, because you're not doing something that's repeatable, okay? And so the reason this trade was a loss was because my daily bias was wrong, not because I made any other mistake, like I put my stop loss in the wrong location, I didn't buy in the right location, I over leveraged, or I revenge traded, or something random that I can't repeat every day, okay? So I followed the rules exactly, I just had a wrong daily bias, and so that's why I was stopped out, okay? Moving on, I'll explain, I may explain a bit more about the trade. There was some 4-hour order flow I was watching where 4-hour just repriced into, you know what, we'll just show it real quickly. So in the same time I took this first trade, I was also watching the 4-hour, not just the 15-minute. I didn't just see a 15-minute for value and just buy it randomly. I was reading this 4-hour order flow. So if we can see this, just ignore these trades, I'll talk about them after. I'm just looking at this one right now. That's what it looked like, essentially. If I pull that to the side there, when the price was live, printing, this is what it looked like, okay? On Monday, we were priced down inside this 4-hour for value gap, and we displaced higher, and we left these for value gaps open. We left them open. And then we created another 4-hour for value gap. We were priced into it on this candle, and we had a really nice close on this 4-hour candle, which helped me to trust that price was most likely going to continue going higher and not just reverse and go lower, even though that's what it did. You know, over time and time again, there's always going to be a chance that you're wrong, that everything lines up perfectly, and you still get stopped out, and that's just the way trading is, unfortunately. I have like a freaking gap in my beard, man. What the frick? That sucks ass. Anyway, so yeah, I was watching this 4-hour chart. I really liked how this 4-hour candle closed. This one opened, traded down. That's the candle I bought in, obviously. And yeah, it looked to me like it was just going to keep running higher. Like if in a different type of market, like high time frame resistance condition, like on the daily chart, weekly chart, if we were in a more of a low resistance condition, which is kind of, you can't really tell. Like you can tell, it depends, like leaving for value gaps open like this, like it did here, creating a lot of for value gaps, leaving them open and running higher. That's how you know you're in a low resistance condition. But obviously you can always be wrong and pick and accidentally go long right at the top. Like obviously it can happen. But also trying to pick tops and shorting, randomly here, shorting would have been very, even though it would have worked out this time, it would not have been according to my rules because I had a bullish daily bias. There's no way I could have guessed that this daily candle would go lower, right? Everything looks bullish. There's no way you could have guessed. Only maybe using a inversely correlated market and seeing some kind of SMT, maybe you could have guessed that it would have reversed here, but I don't use SMT personally. I see it happen too many times, and it doesn't. I just don't like using it. because I see it too many times, so I don't trust it, kind of thing. But someone who's experienced with SMT maybe could have seen an inversely correlated market, make SMT here and gone, actually maybe it's going lower, whatever, I don't care, I'm not doing that. I'm not trying to pick tops, I'm trying to go with the flow, go with the trend, right? So we're not trying to pick tops. So with all the information that we have, all this data we have, most likely it's going higher, right? So that's why I took that long trade, and we can see I happened to be wrong, and I got stopped out. It went back through that 4-hour value gap, disrespected it, and went back and closed in this one down here. So there we go. That was the first trade. loss of 100 and I think it was like $188 something. Cool. So that was the only trade I took all day. Nothing else happened. Okay, and also I have a, I should probably show you, I do have a screenshot taken from when I took this trade. So here's the screenshot I took when price was pending live. You can see the two 15-minute fair value gaps here. These two 15-minute fair value gaps, you can see them. You can see my entry was right there at that at the high of that lower fair value gap, and my stop loss right at the low of that swing low there. And then I had this little Judas swing here. I had this highlighted, and I was using standard deviations to potentially look for a take profit spot. I wasn't really sure. I didn't have a take profit because if it was going to rip the upside, then there was really no real like idea for how far it could go. But I could have realistically held to the end of the daily candle. If it was going to be an up close day, it probably would have kept going. But you know, potentially you could target like one of these standard deviations. I'm not super experienced with standard deviations. I don't fully trust them. They're just like a bit of a guideline. Sometimes I'll use them to look for take profit areas above. Usually if it lines up with a PD array that I'm looking for, or a buy side or sell side liquidity. But there's nothing at all-time high. There's nothing to aim for really. So yeah, I wasn't sure about the target there, but it would have definitely gone more than 1 to 2 if it had actually gone higher. But yeah, so that's the first trade. So moving on to the second trade. Let's zoom in here. Trying to remember this trade I took. Here we are. Yes. 5 minute time frame this one was. Okay, so this is the model. First we'll go to the model, then I'll go higher time frame and show you like the order flow I was looking at. And then yeah, we'll obviously I don't know, explain whatever else. So obviously we have buy side liquidity here. Now you can see after yesterday, so on Tuesday, this was on Wednesday, this was on Tuesday. So this trade didn't work out. We went through that 4-hour fair value gap and we went lower. Where did we go lower to? So we went lower, we made this double bottom. Okay, we can see this big rejection block here. We traded down inside that and then we started going higher, okay? Now I'm still on the daily chart. Just because we violated 1 4-hour fair value gap doesn't mean I'm bearish now on the daily chart, okay? I'm still looking for, I'm still trying my best to be bullish, okay? Because I don't want to flip bearish until the daily chart order flow is violated, bearish, then I'll be bearish. Until then, I'm still remaining bullish, okay? So if we go to the 4-hour chart, right, you can see we left these open, but we actually traded back to those. And since we traded back inside this fair value gap, we can see the consequent encroachment, which is the 50% level of that fair value gap, was respected perfectly with candle bodies. And then we started going higher. Down to the 1 hour. This is how I find my trades, right? Down to the 1 hour. We can see the respect of this 4-hour fair value gap here, and we started going higher. And we actually, if we look here, we traded up inside this 1 hour fair value gap. We went lower one more time to the 4-hour one, and then we went higher with fair value gaps formed here, and then a balanced price range, and then another fair value gap through this, which is actually an intermediate term high. This swing high here on the 1 hour chart why is it intermediate term high? Because it rebalanced a SIBI, okay? So when this candle opened and went all the way down here, and then this candle opened, it repriced back to there and then went lower and didn't come back to the low of this previous down close candle. It's a SIBI, sell side imbalance, buy side efficiency, because there's only down price action here. There's only down candle, okay? For a market to be delivered efficiently, there should be both up and down movement so that both buyers and sellers can interact with the market, okay? And there was only down. So when it went up through here and repriced and almost fully closed it in, and then went lower, that's the way I look at the market. Is I see that as, okay, it repriced inside that to put some up close candles inside of this area where there's only down close price action. That's essentially, if you believe the market is delivered by an algorithm and not by just random buying and selling pressure, then that's how it delivers the market this way so that both buyers and sellers can interact with the market. Okay, so it did this, it went lower to that 4 hour value gap, then it went higher and violated that swing high, okay? So that is a violation of bearish order flow, okay? Great, I'm still trying to be bullish. So this, when it violates that, to me, I go, okay, we're bullish again. We were bearish here, yes. I mean, we were bullish, then we were bearish. Now we're bullish again. So now I'm thinking, okay, I'm still looking for the daily chart to go higher. So I'm going to trust that now that bearish order flow in the 1 hour has been violated, I'm going to trust that it's going to continue going higher. Again, unfortunately, this time I was wrong and it went lower again. Again, that just depends on the quality of the resistance of the market that you're trading, okay? If it was a lower resistance market, it would have kept going higher. But unfortunately, this market is experiencing quite a bit of high resistance right now. And that's exactly why I had 3 losing trades, is because I'm trying to trade a market that I think is low resistance, but it's actually quite a bit more high resistance than I anticipated, at least this weekly candle. Okay, it was actually a very not great week, trading week at all. Monday was the only good day. You can see Monday actually, this is low resistance. It's moving quickly. It's leaving for value gaps open. The rest of the week was just, it literally just went sideways. The entire remainder of the week it went sideways. So anyway, now that we followed this intermittent high, I'm looking for higher prices again, okay? Looking for higher prices. So here, we're here. Creates this for value gap here. But I'm actually looking back a little bit to this reclaimed for value gap. Let's delete this for now. Let's delete this. As soon as it violates that, I'm bullish again on the hourly. Okay. Now here we have displacement. It doesn't respect that for value gap, but it does come back inside this balanced price range. It does respect about 50% of that balanced price range, and this is a reclaimed 1 hour BISI. Okay. And so we go down to the 5 minute. By the way, this is in, that's the next day. Don't look at that yet. We'll get there. Okay, so again, buy side liquidity is the draw on liquidity, okay? I'm looking for price to go to buy side liquidity. Okay, great. We come down, we respect this 1 hour reclaimed. This is that 1 hour reclaimed for that I just marked, okay? And then we violate order flow on the 5 minute by going above this 5 minute swing high. I suppose you could say it's actually a short-term high, not an intermediate-term high, because it's not actually rebalancing anything, and it doesn't have a short-term high to either side of it. So it's actually a 5 minute short-term high. Still, it's still a swing high that created this display. Like, it moved aggressively down, took that low there, and then ran higher. Okay. So my whole idea. So when it ran higher here and it formed this fair value up here on the 5 minute chart, my whole idea was that I'm going to be buying inside that. You can see me buying there. So 89.8. A little bit, I missed the entry a little bit. I bought up here, but I'm buying that fair value gap. That's okay to be a little bit buying outside of it. It doesn't have to be in exactly, as long as it's close proximity to that fair value gap. Okay. And where do my stop loss go? Obviously at this low or this low. 679. Yeah, so this swing low. I could have put it at that swing low, but I mean that swing low is more of a, it doesn't matter really. So you can see I'm buying this for value gap, stop loss goes at that low, and I'm respecting, and briefly it did respect that and go higher here. Okay. Doesn't mean I can trail my stop loss yet. It would have to like displace higher and leave this range leave this range here. So go above this high and displace, and for me to trail my stop loss to break even, something like that. It's shown, it's gone higher in respect to that, but it hasn't shown anything yet. And then obviously it turns around again for the second day in a row, reverses, and goes straight to pretty much to my stop loss. Okay, so that was my second loss. That was the 200 and whatever losing trade on the Wednesday that I took. Again, why was it a loss? Did I over leverage? No. Did I enter not in a fair value gap? No, I did. Did I put my stop loss not at a swing low, previous fair value gap? No, I did. Okay, so no rules were broken. Again, my daily bias was wrong. Okay, so again, my drawn liquidity was wrong. Okay, it doesn't mean it can still go to that drawn liquidity, but it didn't do it in this daily candle. Okay, so that was my mistake. Obviously, there's not really too much. I've found through my experience, there's not too much of a way to know exactly which daily candle is going to run to like a drawn liquidity. The best thing you can do is align yourself with the 1 hour, 4 hour order flow, which is what I did. Look for a lower time frame entry, which is what I did, and enter, and just freaking hope to all hell that you don't get stopped out. But if you do, it happens, right? It simply happens. So it is what it is. It is what it is. Again, no rules were broken. Simply an analysis mistake of me anticipating price to go there to that draw, and it didn't do it. Not on this daily candle. Okay. All right. So here we are on the screenshot I took of this second trade that I took on the Wednesday. So we can see my stop loss was there. It was, I mean, I did move it down to the actual swing low, but yeah, realistically on the 5 minute, there's a swing low there. On the 15 minute, there's a swing low there. So I did end up moving it down to that one just because I just wanted to be like 100% accurate about putting it. Like, I don't want to try and always have my stop loss super tight. I just want to like put it where I know it's like really good and safe, you know, if I'm on side. So I moved it back down to there. You see I entered here. There's a 5 minute fair value gap there. This is the 15 minute time frame, so you can't see a 5 minute fair value gap there. But there is a 15 minute here reclaimed. You can see we went through it here. We disrespected it. Then we went back above it, closed above it. And so that basically violated the idea of that being an inversion fair value gap. And so I was using it as a reclaimed 15 minute and entering in that 5 minute actual BISI that was formed there. And yeah, that was my entry. And then obviously I was targeting that buy side liquidity there. You can see it was more than two risk reward. So that was the idea essentially. And then actually, if we move on a little bit, is this gonna work? Yeah, great. So this is actually an idea I had for a short trade, but I didn't take it. So after getting stopped out now twice on Tuesday, long trade stopped out. Wednesday, long trade stopped out. Okay, now I'm kind of looking for lower prices. Maybe, because it depends. There's a lot of weighing up you have to do to decide. Like if I entered twice with properly in order flow, trying to be long, and I get stopped out twice, it's like pretty unlikely it's still going higher, because it shouldn't. If I've entered into order flow properly, then either I'm wrong and it's actually going lower, or it could be, which it was in this case, super rangy seek and destroy week, which is obviously absolutely cooked, and you're going to lose a lot of money on a week like that if you keep trying to trade it, which, you know, I took 3 trades. It's probably a little bit too much, to be honest, when I realistically wanted to just take one. So yeah, a little bit of over trading, I would say, but yeah, that's something that I'm going to take into next week. This more information, try to be a bit more hesitant to actually take trades next week. Still, I wouldn't say 3 trades is over trading, really. Like, it's not like taking 10 trades every day. That's nuts. But yeah, for me, when I said I want to take 1 trade a week, the fact I took 3, it's a little bit of over trading. So we'll try and knuckle down on that next week and take a little bit less trades, like maybe just 1 or 2. Okay, so I started to frame this potential short trade idea of going down to this sell side. I'm trying to be like, okay, is the daily chart really going higher still? I've been stopped out twice trying to be long. Maybe it's actually going lower, okay? That's what I was thinking at this point. I still wasn't really anticipating a fully sideways week, which is what we pretty much got, but yeah. Anyway, so going back to Topstep. So just look at this. Short trade I framed. There's a small 15-minute fair value gap here. You can see that. So you can see this 50-minute fair value gap. Displacement, right? Violation of bullish order flow because it went through that low there. Okay, and then swing high, right? So that's my model right there. Sell a SIBI, stop loss at the previous swing high if you're bearish, and then target sell side liquidity, and then more sell side liquidity down here. Okay, now I didn't take this trade, but let's just see what it would have looked like. Okay, as you can see, here's that fair value up that I framed. Right there, SIBI, it's a SIBI. Okay, and then we can see, now I didn't take this trade because I was going to, but I didn't take this trade because it was almost the end of the day, and Topstep you can't hold through the close of day, so I didn't expect it to really aggressively run lower, and so I just ended up not taking it because I knew that even if it got entered, and even if I was on side, I still wouldn't have, like it was almost the end of the day, I would have got kicked out of position. I just didn't feel like it was worth taking, okay? But as you can see, if we ignore the fact the market closed, when did the market close? The market closed right here. Market closed right here. Even if I targeted, and I was targeting some low down here, potentially, right? I was potentially looking for these lows down here. But actually, this lows would have been really nice. These relative equal lows, intra-week, intra-lows. As you can see, that actually would have been a trade that would have worked out. If you entered in that SIBI there, we stop loss at that swing high there, you can see that's a 5.4 risk-reward trade that actually would have panned out. However, unfortunately, the market closed right here at this dotted line. You can see. Can I make it thicker? Yeah, thickness, there we go. The market closed right here at this dotted line. So I would have been kicked out of the position right there. I could have re-entered, but that's when I go to sleep. I pretty much go to sleep right around, this is all New York time by the way. I go to sleep right around just before the market closes, around here-ish is where I go to sleep. And then I sleep through Asian range. And I wake up maybe just before London session. So here somewhere I would have woken up. Now, am I really going to go short, get stopped out by Topstep, leave, like cancel my position, and then like not sleep basically, and try and wake up and re-enter, and then freaking do all this shit when I'm on no sleep, and then get no sleep? Like, no, I'm not really gonna do that, right? It just happened to be that this run to that sell side happened at a really bad time, where the close of the market is right in the middle there. And I just don't trade that time. So one time of day I don't trade. I'm awake for the rest of the market, but during this time I don't trade it. I don't trade this time, right? And so there's a trade I missed out on, but it's also totally fine. It's totally fine. You can see like I had the screenshot, like I did frame the trade, I just didn't take it, okay? Okay, so moving on to the last trade now. Real quickly, we're gonna try and wrap this up. Back to executions. Okay, so after, we're just not even going to go to trading view, I guess. So after we went lower there and we took that low, okay, that was that low that trade that we framed there, that short trade that went to the intraday, intra-week lows. Now I actually do need to go to trading view actually for this. So we are going to jump across to trading view. Hold up. After we traded lower here and took out that low, I'm still trying to think, is the daily chart really actually going lower now, or is it actually most likely going higher still? Even though it went lower to this intra-week low, right? And we went lower here briefly. Is it actually going lower now? Is it reversing and going lower? Okay, or is it most likely still going higher? I came to the conclusion that it's actually most likely still going higher. Why? Because if we look on the daily chart, we can see there's a daily for value up here, okay, daily BISI, and we can see the daily chart is respecting it, okay? We closed above the concentration here, we traded down again through it here on this day, and now we're still going high, okay? So there's absolutely no reason to be bearish. There's absolutely no reason to be bearish. If I want to take a trade, if a model forms, I want to take a trade, it has to be a long trade, okay? There's no way I'm trading short in this condition. If we were to get below this daily fair value gap, treat it as inversion on the daily chart, then I would potentially be bearish and look for this intermediate term low here and this open inefficient section of price action to be rebalanced, okay? Because again, that's how the algorithm moves the market. If you believe in that sort of thing, it creates inefficiencies, but you know, there was people buying in here, not enough selling happening in there, okay? And so for the market to be delivered efficiently, there has to be both up close and down close candles so that both buyers and sellers can interact with the market, okay? And so at some time in the future, it may want to reprice down inside that, rebalance that section of open, that open section. You can see from here, fair value gap. Fair value gap. Fair value gap. Now we're only going to mark this to there because it's already rebalanced that section of that fair value gap there. This section here, because the whole fair value gap goes to there, right? And we actually mark the volume imbalance as well. That counts as part of the fair value gap. But it's already been, there's already put some down close action inside of that. Okay, it's been closed already to there. So this is this is essentially what's left. This inefficient section is what's left. Okay, so at some point in the future, especially if we're high resistance and not low resistance, it's going to want to reprice back down inside that, okay, potentially at some point in the future. And if we go to the weekly chart, what is that? We can see there's actually a weekly fair value gap there, okay? Essentially the same area, right? Okay, so weekly fair value gap potentially can be repriced too. Anyway, so back to the third trade I took. So I took a trade Tuesday, long stopped out. Wednesday, long stopped out. Thursday was CPI. I did not trade because there just wasn't anything. I was watching it, but I didn't like the price action. It was still super choppy. Oh yeah, I didn't like it, so I didn't trade. And then that was this day here, Thursday. Friday opens here, and I can see, I'm looking at the daily chart. Okay, we respected this daily fair value gap. We're most likely still going higher. So again, I'm still looking for longs. Even though we had this short-term lower price action inside of here, we've respected this daily fair value gap. So reading the daily order flow, where do you think it's going next? Most likely, okay, most likely it's going to that high. Most likely, okay, obviously not 100%, but reading the order flow, where is it most likely going? The high, because it respected this daily fair value gap, okay, and the conditions we're in. Okay, so we go back to the 4 hour. We can see the 4 hour is perfectly respecting the constant encroachment of that daily fair value gap here. We trade into it once, we trade into it again, and then we go higher. Okay, so Friday. The time is Friday now. We respect that and we go higher here. Now again, we had this lower section here on the 1 hour, okay, we had this lower section. However, we can see once again, just like back here, we had that violation of bearish order flow, which caused me to get long again. Here we have another violation of bearish order flow with this SIBI. Okay, so it's like red, right? Because it should, usually, if price is going lower, it's going to reprice back, rebalance this section of inefficient price action, and then keep going lower. It didn't do that. It displaced through it very strongly, and so this becomes a inversion fair value gap. Okay, so you can use that to get long if you're bullish on the daily chart, which we are. However, there's also a 4 hour fair value gap here. So those two are like overlapping kind of. But both those potential, it's where we look for actual support, not trend line support or random lines we've drawn, but because we violated this and displaced through it, it's like resistance turn support. Okay, real resistance turn support, not random. Okay, not random. It ain't random. Okay, there was an actual inefficiency formed here. We were priced into it, briefly treat it as resistance, and then we displaced through it, which is a good sign of bearish order flow violation. And a good sign that if we were bullish on the higher time frame, then this is most likely going to continue higher. It also kind of looks like a, who can tell what it looks like? It looks like a bull flag. It's squeezing like this. Probably going to go higher, okay? Bull flag. That's a retail concept. However, I don't see why it wouldn't pan out. I used to, when I started learning ICT, I used to see a retail concept and just immediately be like, bull flag or trend line or like whatever. I would be like, bro, this is definitely not going to work out. It's a freaking, it's a pattern. Patterns are fake, dude. Like, and I would just fade it, you know? And I would just take losses, so much losses. Oh, you have no idea. years of losses. But anyway, now I actually look for patterns, and if it's in a position where I'm already bullish and a bullish pattern forms, then I don't try and fade it. Not at all. It doesn't add any confluence or anything. Like, I don't care about it at all basically now. I just don't try and fade that shit anymore. That was my mistake. The only time it would add more confluence is if I was super bullish or super bearish and then a pattern formed in the other direction to what I was already looking for, then that would kind of make like I'd be probably more trust. I would actually fade that one. But I'm already bullish, so why would I fade this if I'm already trying to be bullish? Okay, that's the thing. That's the one, bruv. And we have this high time frame intermediate term high here. Why this one? Because this swing high began this movement, which took out, it actually did take out that low. You can see it went a little bit below that low there. If we mark that in red, you can see this larger swing here actually took out this low. We have this one already here, right? You can use any kind of intermediate term high, but yeah, essentially we went lower, we took out that low, and then we went above that, so it's bearish order flow violation. So if we are going higher, we can now buy for value gaps and trust that, and put our stop loss below swing lows and trust that we're not going to get stopped out, okay? So that's what I did on Friday. I know this takes a lot of time to explain, but it is a lot to talk about. So yeah, so we have this 4 hour for value gap. So essentially what I was doing is I was buying inside this, put my stop loss at this swing low. Why that swing low? Because that's the previous swing low before this dealing range was formed with this fair value gap inside of it. So I was buying that, stop loss at the swing low, and then looking for price to continue going high tab by side. And this was the last trade, third trade and last trade of the week. And guess what? It didn't go higher, unfortunately. Very, very unfortunate. Very unfortunate. It just went sideways the whole day, and I ended up getting stopped out by Topstep when the market closed at 16:45 or 50, whatever the time is, whatever that it stops. We go back to Topstep and we'll have a look. But yeah, trade was taken, and it just went sideways the whole day, and I got stopped out for a small loss, not a full stop out, but a small loss. And I actually did something. The reason why this trade said 2 trades on Topstep in the calendar is because I actually added to this position. So I added 1 contract here into position, stop loss there. And then what I actually did, if you look at the 30 minute, 30 minute, 30, there we are. I added another contract inside of this fair value gap. So I went 1 micro long here. Then when it went here, I used, I think, yeah, looking again at the 5-minute chart, I used this intermediate term highs being violated there. So you can see SIBI, traded up into that SIBI. Intermediate term high, violated here. You could have bought there, or inside of this 30-minute BISI, right? And so I added one here in the 4 hour using the 4 hour dealing range and 4 hour swing low to put your stop loss. Then when it violated that 5-minute momentum high and traded back into this 30-minute fair value gap here, I added another one and I trailed my stop loss to this low. And that actually allowed me to cut my risk back to $200. If I'd added another contract and left my stop loss at this low, I would have been risking, it was just over $300, and obviously that's too much risk for me, right? I want to be risking 250 max. And so by adding that second contract and trailing my stop loss into this low, which is also shouldn't be violated, right? I was allowing myself to really capitalize on this potential movement, okay? I would have made like $600 and something, so it would have actually gotten me to a profitable week, even after taking 2 losses, if it had actually gone higher there and not just gone sideways for the whole day. It would actually, if it had gone higher, I would have made 600. On another day, I would have capitalized on that. Not happened to be not today, but not this day. But on another day, I would have capitalized on that, and I would have actually had a profitable week at the end of all that. Unfortunately, I got unlucky, and it just went sideways the whole day, and I didn't get stopped out. Luckily, it almost stopped me out here because my stop loss was just at a tick below that low. So very, very almost stopped me out there, but it didn't. Went higher, and I saw some profit. But I can't just leave. It's not in my rules to just leave trades randomly and be like, oh, it's going sideways. Oh, it's scary. I'm gonna get and just leave. I can't do that because I can't. That's something I can't repeat. Like, once again, going back to trying to be profitable long term, I can't repeat randomly leaving trades. Okay, that's not something that can be repeated. So I have to either get stopped out at the low, take profit, get hit, or Topstep kick me out at the end of the day. And that's exactly what happened to this trade. Right at the end of the day, Topstep closed my position, and I ended up taking a $70 loss. And so we'll just go quickly back to Topstep X to view that. Here's the displacement. It's 1 hour fair value gap, same pretty much thing as the 4 hour, same spot. You can see me buying one here. Stop loss went originally that low, and then if I go to 30-minute, you can see I'm buying inside that 30-minute fair value gap here. Okay, so one stop loss here, displaced higher, trailed my stop loss into that low, bought again, almost got stopped out there, went sideways, and then right here at the end of the day, Topstep kicked me out. I didn't leave that position myself. They manually close your position for you, and took that $70 loss. So that's the entire trading week. There you go. There you have it. 3 longs, all failed. So now really quickly, I really tried to get through that as quick as I could. It's very hard though, because there's a lot to talk about. Like, there is a lot to talk about. There's a lot of analysis that I go through, and me trying to explain that to you guys and explain how I look for trades and order flow and the trade setup and going over everything. It takes a long time. But I think I'll probably get quicker at it over time, right? This is obviously, I'm kind of new to doing this, so not trading, but doing the whole trading on video thing. So going back to trading view just real quickly, I'm just going to talk about what I'm going to do next week, okay? So obviously we got shown up a little bit this week, right? We got shown up. We got shown that even if you take trades according to your rules, you still take losses, okay? And that's something that simply happens. It's something that you have to learn, something you have to go through time and time again to learn. There's no way out of it. And as soon as you start changing things and trying to save yourself from losses and stuff, when realistically, if you followed all your rules and you take a loss, then you did nothing wrong, right? If you're following your rules are there to make sure that you're doing something every day that's repeatable, okay? And only through backtesting and through forward testing and through seeing the market for years and years, do you know that following those rules is what's going to make you profitable, right? Following those rules, that's exactly what makes what you're doing repeatable. Okay, if you don't follow your rules, then you're not doing what's repeatable, and you'll see random profits, random losses, whatever. And you might get lucky and make heaps of money one day or 1 week or 1 month, and then the next month lose it all. It's essentially gambling if you're not doing the same thing every day, every week, every month. It's just gambling. So if you want to be profitable long term, you need to be doing the same thing every time. Same thing. And that's something that I've learned through years of trial and error. So yes, anyway, so now going into next week, okay, weekly outlook. So we still have this weekly fair value gap down here, which we already had last week. Now, actually, my weekly bullish bias was correct. We did actually go higher on the weekly candle, but all that movement came from Monday, and I hate trading Mondays. Usually, Mondays are the worst day of the week to trade. Usually, okay. Usually, unfortunately, this 1 week that I happened to trade on, that I began to start this account on, this was the 1 week where we just had to have a really good Monday, which I just don't like to trade, and then all the other days were just absolute shit, basically. Sideways days, okay? That's all right. It happens, okay? It happens. We just gotta push through it, and just not let it affect you, kind of thing. I'm talking more to myself right now than you guys, but anyway, so we obviously still have this weekly fair value gap. Now that this weekly candle's closed, we have another weekly fair value gap. So we're actually forming a bit of a range here with weekly inefficiencies here. If we go down to the daily chart, we can see this is what it looks like. Now, I am a bit hesitant to take another long trade, especially in this small range here, which is where I have been. Last week I've been trying to get long inside of this range and look for that external range buy side liquidity. Obviously, I was proven wrong 3 times. We haven't actually violated this 4-hour fair value yet here. We asked, even though it went sideways all day Friday here, it hasn't actually violated that 4-hour fair value yet by closing below it or by going below this 4-hour swing low. Okay, if it was to close below this 4-hour fair value gap or go below that low, then I would maybe look for continuously sideways price action next week, or actually it's going lower. That's what I would kind of try and frame. However, it could, since we actually closed still above the concentration rate and we're still respecting this, it could easily open on Sunday and just rip straight to that buy side liquidity there. However, I don't trade Asian range, so if that happens before I wake up, whatever, I don't care. I am potentially looking for a retracement down into this area. I don't know if it's going to happen next week or the next week or the next week. I don't know that. But the fact is we have weekly inefficiencies left below the marketplace. When we're experiencing some kind of high resistance condition, it could realistically reprice down inside that at some point in the future. Okay, so I'm going to be on the lookout for that. Reading the order flow right now, I would say most likely it's going to this high. But again, I don't really like to trade Mondays. Even though last Monday was really good, it doesn't mean every Monday now. I want to trade every Monday now. Doesn't mean that at all. Most often Mondays still are not going to be great as trading days, okay? Primarily Tuesdays, Thursdays, and Fridays are the days I've found I tend to do the best on. So going into next week, looking at the news schedule, we have on Monday, we got some orange folder news in the AM session. Tuesday, we got some red folder news in the AM session. Wednesday, we have FOMC. Wow, there you go. FOMC. On Wednesday, and then Thursday we've got some red folder AM session news, and then Friday no news. So yeah, okay. Definitely something as well that another takeaway from last week is the fact that I originally in my weekly outlook, the video that I did, I wanted to wait until after that CPI on Thursday and then take my trade, right? Realistically, if I'd done that, I would have actually lost less money this week because my main losses were on the Tuesday and Wednesday before CPI, and then the one trade that I took, the one small losing trade, was on a Friday. If I just done what I said last week and not traded before CPI, waited for CPI on Thursday, and then taken just that one trade on Friday, I would only be down $70 this week. So it's something to think about. Maybe I should listen more to myself and actually wait for that major news to come out and then trade the rest of the week. So again, we have a similar situation this week where we have FOMC, which is one of the big 3 news events as well, and it's on Wednesday. So realistically, It doesn't mean that I can't find a trade set up on Tuesday or something like that, but realistically, I should probably look to trade post FOMC on Wednesday, so around 2:30 to 3 o'clock. It's going to have to be a quick trade on a low time frame probably, because market closes at 4, so we don't have long, but you can still definitely get a good trade in there. I've done it before. If I'm really confident on it breaching to some kind of drawn liquidity, and then Thursday as well looks kind of good. So maybe Tuesday, although I'm gonna really try and be more hesitant and try and trade less this week. 3 trades a little bit much for my first weekend, you know, but I only really want to be trading once a week. I just want to find one really good setup, you know. That's my goal. And even though I have like 4 years experience, it's still hard to do that. It's still difficult, especially seeing as this last week. Like if I had a really good week last week and it had ripped high and I'd just taken win, then I don't know, I would probably be feeling really confident, you know. Now I'm feeling definitely a little bit hesitant, more hesitant than confident, because I've been shown up last week by just taking losing trades. But it doesn't mean that if I know my model is legit and the setup is, it should work over time, then taking losses shouldn't impact me, you know. Like it still does a little bit, but it doesn't fully make me like start changing things. I'm not going to change nothing, okay? I know changing things is what leads to unprofitability. So I'm going to stay with the same model, stay with the same setup, stay with the same rules. I'm just really going to work on trying to be more selective with my trades and just trading less in general. So ideally next week I want to see like maybe 1-2 trades. Realistically, I'll try aim for that. Did I talk about this? Yeah, I mean, currently reading the order flow here, we went down, we respected this inefficient section of price action. And actually really quickly, I'm just going to show you something. If we go to the 8 hour, this is actually one singular fair value gap. And if we mark that with quarterly levels, we can see the constant encroachment is actually that main level of support that we see here, okay? So if we look at it now, we can see that 8 hour fair value gap. Sometimes you have to go to strange time frames to find the actual fair value gap they're looking for. Otherwise it looks like multiple ones. But yeah, this is actually one 8 hour fair value gap, and we can see the constant encroachment being respected there. So there's really no reason to be bearish right now. Does that mean I want to take a long trade now, right now? No, probably not. Also because I don't trade Sunday Asian range, but also because I've already been stopped out quite a bit trying to get long inside of this range and look for that movement there. So most likely, and as well, most likely I'm not going to trade Monday. So yeah, we're just going to see what happens on Monday. Most likely I think it's going to go high to that high, but we're not going to trade it. We're just going to see what happens. And then we'll see if there's some kind of intra-week reversal, maybe like all this order flow being violated to the downside with strong displacement. Maybe we could potentially look for a short trade next week. Maybe, we'll see. It could just have a insane week where it just rips higher. I'm not sure. Yeah, I'm definitely more hesitant going into next week. So that's the theme of next week. Is trade less, be more selective, be hesitant. Don't just willy-nilly buy for value gaps. Yeah. Thanks for watching, guys. I know it's been a bit of a long one, but as I said, you know, there's a lot of stuff I have to go through, a lot of information I'm actually kind of talking about and things I'm talking about. Try and do it as fast as I can. I'm sure I'll get better and quicker at it, but yeah, thanks for watching, and we'll see you next week. And good luck with next trading week, everyone who's trading.